The dot-com bubble. What happened, and how does it compare to present? The craze of the internet is still going so high that it has become an important part of our lives. But have you ever thought that when it started for the first time, many people were so attracted to the internet world, and they believed that they could make millions of dollars by investing a lot in dot-com companies. This speculation filled the air in the dot-com bubble, so it resulted in the massive valuation of the tech companies within just a few months. But as we all know, when the price goes unexpectedly high, it has to come down, but in the worst possible way. We all know it as a financial crisis. Hello 101 community, welcome back to our YouTube channel. This video is about the dot-com bubble. Before we begin, if you are new here, make sure to subscribe to our channel and turn on notifications to never miss any updates. Now let's start. The history of the dot-com bubble. This generation is enjoying the fastest speed of the internet, but the time was not the same in 1993. You would be surprised to hear that the internet speed was only limited to 56 kbps. Most people still know the sound while connecting to the internet with your computer. Still, it was a time when people were getting familiar with the internet more and more. And even the entrepreneurs like Jeff Bezos and many others saw a massive opportunity despite the slow speed of the internet. The number of websites on the internet also increased from 1 to 23,500 in 4 years, starting from 1991 to 1995. Now this was the time everything was going to be changed, and no one would have ever thought. Within the next year, the number of websites added to the internet increased by 996% to 257,601. The craze of the internet was at the top level, and many big names like Yahoo and many other internet companies were also launched. In mid of 1995, Netscape went from private to public, which meant that the public was given an opportunity to buy its shares. Now the interesting thing begins here. The share price of Netscape on August 9th, 1995 was just $28, but at the end of the same day, the share price jumped from 28 to 75. Yes, that's true, but in the end, it closed at $58 per share. Actually, the Netscape company was introduced 1.5 years earlier than being public, but just imagine, the net worth of the company went from zero to 2.9 billion in just 1 year. The extreme valuation from zero to billions of dollars meant that anything could become a gold mine if it had .com in its name. The web attracted many investors to put their money in these companies. You might be thinking that what's wrong with investing money? Even if we talk about today's world, investors continuously put their money in stocks. Actually, at that time, there was no limit. Internet companies wanted to gain more users, and that was only possible by growing fast. These companies planned to invest in the advertisement because, in this way, they could make more people aware of the new world. However, people did not know that several companies were not even making profits. These companies did not care about their negative returns, and their major focus was growth. In the year of 1999, there were more than 450 initial public offerings, and the majority of these companies had .com in their names. For these internet companies, this IPO proved to be the best decision ever because 117 .com companies doubled their prices in just 1 day. If we talk about the 6 years, like from 1995 to 2001, 34 billion worth of capital was raised by 439 companies having .com in their names. The other factors also played a major role in this regard. We talk about the taxes. The government of the US decreased the percentage of taxes on capital gains from 28% to 20%. Moreover, the interest rate was at its lowest point during that time, so this provided another reason for investors to invest their money into .com companies. You won't believe that even the investment banks earned a huge sum. They gave the facilities of IPO to many companies at the same time. Only one man, the chairman of the Fed, warned about this crazy spending, but he did not do much to correct the behavior of people. No one was aware this could be a disaster. Yes, there were a few dot-com companies that launched in the 90s, like Amazon and eBay, that became very successful after promising investors. However, many other companies were not going on the routes of success. They were spending blindly on marketing without an intention to gain profit or generate cash flow. It's simple to understand that when investors are ready to give you money, why do you need to generate revenue? When the bubble reached its peak level, now it was time for the bubble to burst. Microsoft at that time was the best performing company, but it was just able to manage 50%. In the first quarter of the year 2000, the Nasdaq index touched its peak level of 513,252 points. If you like the video so far, press the like button and subscribe to the channel. Also, if you want to develop yourself financially and want to take your future into your own hands, check the links in the video description. So, let's continue. What made the dot-com bubble burst, and what happened to dot-com stocks? It is very hard to tell the single point that caused the bubble to burst. But in the case of the dot-com bubble, we can say that two factors played their role in plunging the internet companies. The first factor that played its role was increasing interest rates by the Fed. The Fed added fuel to the fire by raising the interest rates many times in 1999 and in 2000. This increasing rate forced the investors to take their money out of this internet industry, so they were motivated to reinvest their money into bonds. The second factor that also played its part was a recession in Japan that occurred in the first quarter of 2000. The country of Japan was an important player in the field of technology. It is still a crucial player, without a doubt. So the rumors were coming out that it would affect the economies of many countries. This situation spread fear among investors that their investment would lose its value, so they tried to take their money out. In just a few days, the Nasdaq dropped by 39% only in 2000. Internet stocks started to lose their massive value, so investors tried to sell their stocks as soon as possible, which led to additional selling, even at lower prices. The Nasdaq saw its fourth massive drop in its history back on March 13, 2000. The famous company Microsoft also faced an antitrust claim by the American government because there were some serious allegations on the company that it created a monopoly by putting restrictions on PC manufacturers and users to install Internet Explorer. This case badly affected the company because it faced a loss of up to 15%, and the Nasdaq also saw a drop of 8%. So in the end, there was no money left, and these companies broke all the promises that they made to investors, shareholders, and users. The year 2000 was probably the worst year for tech companies. They aggregately lost $1.75 trillion in value. Moreover, the employees of dot-com companies faced a massive problem in the form of job losses. All those internet companies had massive valuations, but within a few months, they lost more than 75% of their valuation. The year 2001 also did not bring happiness to investors. We all know about the 9/11 attack on the World Trade Center, another major scandal. Enron also added fuel to the fire. In the last quarter of 2002, the Nasdaq lost more than 78% of its all-time value. Imagine, these tech companies made so many promises to investors that they were going to touch the sky. These companies spent a hefty amount on advertisement, but this entire dream remained just a dream. However, some of the biggest companies survived this massive financial crisis despite the major drop in the value of their stocks, like Amazon, Apple, IBM, eBay, Oracle, Google, and Microsoft. According to experts, the major reasons behind their survival are inexpensive real estate, low-cost labor, and also a reduction in competition. What are today's current trends and predictions? Many people think that 2022 is going to be a dot-com bubble 2.0 by seeing the drop in the S&P 500 and Nasdaq. But the fact is that this is not 2000. During that time, tech companies were contributing just 1% of the entire GDP of the US. And in 2021, it reached 9.3%. During that time, many tech companies were generating hard double-digit $1 million in revenue. and now they are generating many billions of dollars. Yes, economists are predicting an economic downturn in 2022, which is going to affect many investment decisions. Inflation is also skyrocketing in America, but we should now accept the fact that tech companies are in a way better positioned today, and there is no chance of any bubble, especially in the tech industry. Apple, Amazon, Google, and Microsoft are the top companies in the world, and they are generating a massive cash flow. That's all for today's video. I hope you enjoyed it. If you want to see more videos like this, subscribe to our channel and click on the bell icon so you'll be notified of every update. Also, don't forget to check the links in the video description. And while you're here, I'm sure you want to continue on the path of financial education. Click to watch the video appearing on your screen right now. I will see you there. Take care and stay tuned.